you. Our space is very small here. I don't even need this mic. So before we start, please allow me a few minutes to share about the Executive Center. So the space that we are sitting here is the Executive Center, and people call us TEC, so easier to remember. What is TEC? So TEC is the largest premium flexible office provider in Asia. So our company established in 1994 with the first center we opened in Hong Kong. And after 32 years, we now have more than 240 locations across 37 cities. And now our TEC portfolio, we have nearly 60,000 members worldwide. And the map where we are located now. In Vietnam, we have 3 locations. The first center we opened is in Saigon Center, Tower 1. The second one we opened is in Friendship Tower, and this is the latest one that we opened in 2024, 2 years ago. We have 2 floors here, level 17 and level 18. So what do we have to offer for our clients? So we offer a tailor-made office solution for any size of business. So the main product of TEC is the private office. So the private office we have here, that after the event, if you have time, please spend some time to what do we have to offer you. So we have different size of private office, from 2-3 people office to 20 or 30 people office, and is well equipped with the highest standards. And we will come to Vietnam, and you don't have a team yet, but you will need a business address to register for your business license. So TEC provides you the professional address to register for your business license here. So virtual office and co-working space. So if you just like a freelancer or entrepreneur, and you just need a space to come to work, when you need a space to meet up with the client, so you use our co-working space service, and also meeting and event space. Beside that, we have the IT and business service, a barista bar and lounge, and also the TEC community. So this is some of the photos of our TEC in Vietnam, Ho Chi Minh City. So what makes us different from other service provider is TEC locations worldwide. We focus on premium only. So we will have our locations are in the prime CBD. Like here in Ho Chi Minh, you see we have Saigon Center, we have Friendship Tower, we access, and it's in the exclusive Grade A building. And we only focus on the quality, and everywhere we have the same standard. Besides the facilities that we provide the client, we do have a community team to support you with your events. We understand our space together. We all need a community, to support each other, to exchange knowledge. That's why our team here support our members. Like we organize about 4 events a month. It's an opportunity for everyone to gather and connect. So we have a team to plan for their event and also showcase for our members. We do the B2B introduction between the members locally and globally. So these are what we have to offer. So for more information and details, then after this event, you can just take it here and meet up with me and my team. So we are very happy to show you around. Thank you very much, and I don't want. I give it back to Mr. David. Yeah, thank you.
Thank you. Good afternoon, everyone. Thank you for coming and spending your precious time, right, to listen to us share um, our discussion on this specific. Okay. Now, I guess when you go to a seminar, you firstly would be wondering who is this, how credible is he? So I just want to give you a bit of my background so that done in the past, and if any of you have any question that strike your mind, catch me later and I'll try to see if I can answer some of your questions. So I am, as you can see, I'm not young, right? I've been working for past 30 plus years, and out of which half the time is ironically in Vietnam. So I spent half the time in Vietnam and the rest in my home country in Malaysia, a few years in Singapore, a few years went to the Papua New Guinea. Okay, so I've been around, and my specialty is in tax. Okay, any tax question you ask me, even if I'm asleep, I can answer it, no problem. Okay, of course, it might be wrong when I'm sleeping. So, okay, today's session, right, is not technical, right? It's not about understanding the law and knowing the law in detail, because the laws has been issued since middle of last year. New laws, tax laws, corporate income tax, right, VAT and so on, it's been issued since last year. Hundreds of people have written about it, right? So you all would know some idea about these laws, even on the accounting law. But why do we speak about it right now is specifically on the topic? Why 2026 is a turning point? Personally, when the laws was issued last year, I find there is a progress in Vietnam. Progress means things are going digital, right? And then we have EID, we have uh, companies that does digital or new law coming in. Then end of the year, we have this law that is Circular 99. Circular 99 is the new accounting regulation that replaces Circular 200. So when it came out, for my staff who are to get very excited, right? Same question. See, it's not my but it is what law is recommending for the means by the bankers, by the auditors, right, and so on. Things are moving from human-led to system, right? There's high expectation in certain have and judgment, as well as less room for informal and inconsistent practice. SME often, right, often they don't have a clear process or a clear policy. The owner will say, I want to spend this. Accountant will say, boss, where do I record this? So basically, the decision is made by the owners for certain SMEs, right? And there is, and sometimes when SME incur certain expenses, they don't have contracts. Just pay first, right? We settle things later. So these are the kind of informal practice that the government is trying to encourage people to be more disciplined in managing their finances. Okay. Now the digital transformation reality. Okay. Firstly, integrated digital system across tax, custom, invoicing, and banking. Okay. Now, with last year, with everything being digital, right? So the tax actually are linking their tax system with the customs, and they can be pulling up data from the customs. So with all this digitalization of the government systems, right, it's quite hard for us to rely on the past, whereby we hope that the government do not talk to each other. Even one of the regulations last year was whereby if you are a taxpayer and you are a legal rep of a company that owns the government money and still haven't settled it, right? Basically, to be linked to your VNEID, and you might be prevented to leave the country. So that regulation came in. In the past, it's not very specific and very detailed, but this regulation came in to say with 60 million and above, right, you can be prevented from leaving the country. So it's more detailed now, and everything is digital. So very hard to run away. Okay. Then in terms of automatic cross-checking replace manual review, right? I understand the tax authority have been looking at automating their, or in line with the last point, they're also introducing AI in doing their analysis when they check, or likelihood they use AI to identify companies or during a tax audit. Okay. And of course, the fourth point is less human discretion, more system-generated alerts. I expect the government to rely on system-generated alert to come to you, right, and seek for, clarification or raise queries. And no longer or less discretion moving forward. Okay, so let's look at what is Circular 99. It's actually is moving the accounting rules from accounting regulation from rules to responsibility. In the past, Circular 200 is very rules-based. It will say, for this specific transaction, number one, what you should do, number two, what you should do, and number three, what you should do, right? But in Circular 99, it will be very much, they give you the principle, and you have to make a judgment and apply the correct treatment based on your specific business. No longer one rule apply to all business, right? You would need to assess a specific transaction and is applied to your business. Okay. So for SME, in the past, it's often the challenge is there's not a strong system, weak in system, weak in paperwork, right? So when I work with a lot of SME in the past, it's often trying to solve their problems. Their problem would always be not because it's a tax problem, it's because their process and their system, right? Organized and not disciplined in the way they run the business, and that's often what creates issues within a company. So now for this, this lists out the so-called basic principles within Circular 29. Okay, I will not go through very detailed here. The key thing you need to know is the authorities now expect business to the regulation brings in flexibility, right? And it introduced principle-based approach as well as substance over form. Okay, so that is the expectation of the Vietnam government for business to be more disciplined, to have better governance, and to manage their business. I don't know how to put it. With stronger accountability. Okay, so very quickly, the expectation here is counting records, clear explanation. That means to say the accountant should not be just recording debit what, credit what. It should know the purpose of the transactions, and it should commensurate with the nature of the business, right? Then the other part is substance over form. Okay, so that is the expectation that companies should be looking at the substance of a specific transaction instead of the form. And with the use of management judgment, there's less reliance on rigid rules. Again, Circular 99 is quite rigid. Okay, and then finance as a management tool. Okay. In general, Circular 9 is it applies to the full business structure, okay, and it clarifies the responsibility for finance. Circular 99 also introduced the fact that it's no longer a rule-based accounts, chart of accounts. Your accounts can be customized to match specifically for your operations. Okay, that is the flexibility. Of course, documentation, right? How you structure your accounts, how you structure your internal control has to be documented. Because when the government let loose the regulation, right, they expect business to manage their own records, and they expect business to document and consistently use the policies that they have adopted. Flexibility with accountability. So in the past, here it says that business can design their documents digitally. So there is no longer rigid compared to 200, right? And then the more important part is internal control. Okay, so business is expected to have clear responsibility and control over their money, who decides, who approves, and who is responsible. Okay, so the direction is, in the past, financial statements prepared by companies in Vietnam, often people doubt the validity of the figures. They look at the accounts and say, this one maybe not, figures may not be reliable. So with this, the expectation is business to be more matured and to prepare financial statements that is credible. Okay, and of course, for the benefit of the business owner, it's important to prepare the records that you can defend against the tax authorities. So these are the key areas affected by Circular 99. It has got 11 items here. I don't think I will go through this, otherwise we will finish this at 8 o'clock tonight, right? So my point here is very quickly, okay, just two points. Look at inventory. No, look at provision, okay? Provision under Circular 200, the regulations say if your debt is more than 6 months, you must provide certain percentage. More than 1 year, you must provide certain percentage. And if you follow those rules, tax will give you tax deduction, right? But then with 99, it's no longer following those rules. 99 is the discretion of the business owner to provide or not to provide. The reason to provide would be where there is collection issue. Okay, it does not necessarily be 1 year you have to provide. So you have to substantiate the reason that you provide for a provision. Okay, same thing for inventory as well. So inventory, there are rules in the past, but now it all goes back to the discretion of the business owner. Business owner have to decide and should document it, because 99, you follow the rule, tax authority will give you tax deduction automatically, right? But with, 200, with Circular 99, you have to document the basis of the provision, and you have to substantiate and defend the provision you make in the books. Okay, so this is just an idea as to, another example is construction in progress. I've seen a lot of clients, their companies, they have this account called CIP. Then when I analyze it, it consists of expenses that is incurred for the last 6 years. They were doing a project, they incur expenses, they throw all the expenses in there. After 5 years, they still haven't decided to do or not to do the project, but the cost sits there. But then, under Circular 99, the expectation is for businesses to decide, are these costs still relevant, right? And should we write off these costs? Okay, so key point is all goes back to the discretion of the owners along the guideline of Circular 99. Okay. Now, up to this phase, any question? Okay. Now, how does financial statement look like? Now, the regulation starts from 1st July 2026. So we still have not seen companies that prepare a financial statements under the new regulation. Okay, but then what has changed is report names. This is very minor change, right? Report names meaning, if you're not familiar with accounting, in the past we call a balance sheet. Now we call statement of financial position. That is used internationally, right? We call profit and loss, but now it's income statement. So the titles has changed, right? And then for typically in Vietnam, when you prepare a balance sheet, you don't need to segregate between short-term and long-term. So under the guidelines, right, if you have debt that is due more than 12 months, then your balance sheet, you have to present it separately. What is short-term assets, short-term liabilities versus long-term assets and long-term liabilities. So it is a classification, right? And these are generally practiced in most of the countries that adopt IFRS, right? Or all the countries that adopt IFRS. But Vietnam, we are moving towards there. Okay, and of course, the last point is non-going concern report. Okay, so under the old regulation, you don't have to make this disclosure, but then under the new regulation, if you are deemed to be not in the position to continue operations, then you have to make a disclosure. What do you mean by not in the position to operate, right? It is where your business have got cash flow issue based on your projection. If you don't have enough sales in certain months, right, then your business will have a going concern. So the obligation is for companies to make full disclosure. Okay, so hopefully this drive towards proper disclosure, right, would make financial statements of Vietnamese company more reliable and increase the reliance by other people. Okay, that's my hope. And basically, the regulation is not adopting IFRS. It just take Vietnam accounting regulation one step closer to IFRS. Okay. Valuation, right? Under the regulation, there is year-end valuation for receivables is clearer, right? Business need to assess as to whether their receivables are still valid or not. Okay, so for this, like spare part closely linked to assets in the old regulation, when you have spare part, it just goes to a spare part account, right? But now you have to determine what is this spare part, which asset it relates to, right? Does it improve the existing machinery's lifespan? If it does, then you have to put it as fixed asset. If it doesn't, there's no value, you have to charge it to your P&L. In the past, everything goes to prepaid expense. Standard rule, just throw the prepaid expense and then charge over 3 years, right? But now it's really back to what I mentioned, discretion. Business have to decide and be accountable for their decision. So the last point here is it's not a move to full fair value accounting. Okay. One point I want to add in here is here. Okay. While we talk about year-end valuation, okay, the guide here is business are required to reflect the value of their assets and liability, right, to its fair value, and based on the prudence concept, you are supposed to push down the value and not allow to lift up the value. So basically, provision for your stock obsolescence, provision for your bad debts, right? So those are provision you need to make. Yeah, so I was saying it is paving the way towards IFRS practice, not adopting IFRS yet. Okay, so you can see by changing the name of the financial statements, right, is adopting international terminology. Okay, then it's also encouraging provision recognizing, right, and flexibility in terms of how you prepare your financial statements, how you set up your books, right, provided you document how you set up. Okay, and it has to apply consistently every year. And transparency. Okay, require more detailed disclosure and internal control. What I mean by more detailed disclosure, right? Let's see what's next. Yeah, it's like, for example, if you purchase a spare part, right? In the past, there is just a disclosure to say this spare part is purchased and it will be depreciated over the useful life. But now you have to write in the purpose of whether it relates to a specific assets, right? So it's really on the notes to the financial statements, has to be a bit more detailed. Key takeaways for this is gone should be the days that the business owner spend money and then the accountant figure out how to book or book it according to the fixed rules, right? It should reflect how the business is actually run. Okay. Takeaways would be, if you are looking at modifying or customizing your financial statements or your accounts, right? Do you need to look at whether your system is ready? Okay. And then make judgment visible. So basically, the policy of the company in relation to revenue recognition, provisions, right, foreign exchange, all this has to be documented. So it will be visible and it documented in your accounting policies, right? And auditors may require to document in your financial statements in your notes to the accounts, right? And with clear visibility is defensible. It's easier to defend that you have a policy with the tax office. Strengthen control, and managing transition deliberately. So, in a nutshell, okay, business are expected to be more disciplined, have proper governance, proper internal controls, and enhance their documentation. Okay, that would be, yeah. Next, what happens after you prepare your financial statements, right? So for all business, after you prepare the financial statements, that's where taxes comes in. Okay, so financial statements, accounting is for management, for third party, even for the tax office, right? But then after that, tax compliance, then the company will have to pay tax. So these rates here is what has been published by the government. Okay, so I'm just doing a quick comparison, right? So Vietnam tax rate is still among the lowest within this region, okay, other than Singapore and Hong Kong. Okay, so under new regulation, right, the tax rate is still 20%, but companies that has got revenue of 30 to 50 billion, that means micro company or SME, right, they enjoy 15 and 17% tax rates. Okay, so the rest are not relevant. Now, how do we determine that? And when does company qualify for that? Right? So this is supposed to start from financial year 2026. 5. Oh yeah, 2025. The question now is, can company apply this and adopt this, right? So for our discussion with some of the tax officers, they say they don't have clear guidelines yet, right? And they advise us to declare 20% and then later adjust backwards. So this is the incentives, or this is the new tax structure within Vietnam. Okay, it's phase rates, and often companies or business owner would say, okay, fine, the tax rate is 20%, but that is really not what business owners should look at. They should look at this thing called the effective tax rate. Many often companies, they run their business, right? And end up, they don't pay 20% tax. Based on their profit, they will be paying 30, 40%. So that's what we call an effective tax rate. Effective tax rate means your actual tax paid compared to your accounting profit. Rightfully, the tax you pay should be 20% of your profit, right? But for many business, they always pay higher non-deductible expenses. Okay, timing difference between accounting and tax, right? And then tax audit adjustment because we cannot justify certain expenses. Okay? So this is quite common, and I've seen clients that end up paying 100% of their profit in taxes because of weak documentation, right? Or no documentation, and it happens 5 years later, and the penalties and the late interest pile up, right? So basically, the tax they pay for that specific year is the same as their profit. So going back to Circular 99, right? The requirement for business to be to have proper governance, right? To have record of how the transaction and it all goes back to Circular 99, where business are expected to be more disciplined. That's how I put it. So the effective tax rate would basically impact your cash flow, right? So in actual fact, there are companies who pay the fair amount of tax. There will be companies who pay more tax than they should. What is the difference? The difference is their discipline, how they manage their finance, how they manage their governance, their documentation, right? That would make a difference on how much tax you pay. If everything is done properly, then yes, you'll be paying the fair expanded to include services, goods via e-commerce and digital platform. For companies that is in Vietnam as well as those that are not in Vietnam, right? We have got inquiries from clients that ask us, I sell goods to Vietnam on my website, do I need to pay tax? Right, so that is, there's a lot of analysis that needs to be done in those situations. But then the part here, I believe, is they are going to catch companies that sell directly to Vietnam via their platform that's overseas, like Netflix, like Google, right? These are all considered digital platforms. So they are now already paying taxes. And then the other change in this regulation is capital transfer, right? Now this subject this subject talks about a foreign company that owns a subsidiary in Vietnam and they sell that subsidiary for a profit. Okay, M&A. Okay, that profit is subject to tax in Vietnam. And it depends on whether it's subject to 2% or 20% of the gain, right? But under new regulation, it's 2% of the transaction value. The regulation is expanded to say if you are selling a company that owns another company in Vietnam, which refers to indirect transfer, then that is also subject to tax. Now, it's easy for a government to throw out the regulation. As for enforcement and implementation, we have yet to see how they force people to do that, right? They could go after the Vietnamese company to collect the tax. There is a case like more than 15 years ago, whereby the French sold their big C business to Thai owners indirectly overseas, and the tax authority tried to collect because it's an indirect transfer, right? And because the transaction happened is very prominent, tax authorities try to collect tax, but I think they failed to collect the actual tax from the company in Vietnam, right? But they did collect some fines and impose some fines and penalties, but not for the specific transaction. Okay, so my point is, if ever you decide to sell your company or your business, right, don't publish in the newspaper. Keep it low profile, and then it might not come after you. Okay, now tax exempt income. We have different type of tax exempt income. I will not go through this, but what is important to know, again, back to your accounting, right, is that when you have exempt income and non-exempt income, you have to ask, do I need to keep separate books? Okay, do I need to keep separate books for tax purposes? So that goes back to the tax regulation. Tax regulation do say that for certain exempt or non-incentivized income, right, cannot be offset against incentivized income, then you need to keep separate books. So we have seen companies that just do first, and later when they need to keep separate books, then they can't, right? So it all goes back to, from the first day, you need to know what the rules are, and from the first day, it's best to set up proper policies, proper accounting policies, as well as put in decisions to see how you manage the books. Okay. These are other changes, right? Now, in the past, capital transfer, when a company overseas that sell the business or they sell a subsidiary in Vietnam, the tax is at 20% of the profit. If you make a loss, you don't pay tax. But the regulation now simplify it to say, I don't care you make loss or profit, you just pay me 2% tax, right? Even though you make a loss, but you still have to pay 2% tax. So it's almost as good as a transaction tax. Similar to you buy a house in Vietnam, you sell it, you still pay 2% tax, right? So I view it as a transaction tax, which is, my opinion, a good thing, right? Because 2% is still bearable compared to you sell a company, you make $100 million and then you pay 20% on the 100 million. I rather pay 2% on the 100 million, right? So I would say it simplifies, right? And it does not cost a high tax, and foreign companies are more inclined to comply. Back to the big C case, right? Let's say it's 500 million. And if they're asked to pay 20% of 500 million, that's 100 million. They will fight not to pay, right? But if it's 2% on 500 million, which is 10 million, they might just say, okay, we pay, right? 100 million and 10 million. So I see this as a good thing, right? And it simplifies a lot of things. Of course, this is something you all know, right? Non-cash payment threshold is now 5 million. So businesses are encouraged not to use cash anymore, right? I see Vietnam in general, the society is already a non-cash society. Everything is barcode, right? So this one shouldn't impact any business, right? Unless, of course, reality is in Vietnam, sometimes there are expenses that you still need to pay cash. This is the under the table kind of expenses and don't have barcode, right? So it doesn't get tax deduction. Okay, here this is what I mentioned, loss offsetting, right? Real estate investment project and project participation losses cannot offset incentivized income. So if you make losses from selling property, right, or in certain projects, this definition still not clear, right? And you cannot offset against your incentivized income, means income that is subject to tax holidays, right? And then in here, mineral exploitation losses must be declared separate and cannot offset other profits. So again, goes back to your accounting, right? Policies, your accounting policy has to set clearly, right? Cannot just say now, we just record first, and at the end of the year, we figure out how we do our reporting. Okay, that would be a bit late or a bit challenging. Here, tax incentive, not much change, right? Under the new regulation, right? Except we have a new exemption for encouraged sector, 4 years and 50 years, 50% reduction. And these are the preferential rate for specific projects, and all this needs thousands of billions of investment, right? So that's not really applicable, right? Because if you're investing thousands, billions, you're no longer SME. But in any case, the important part is if you are enjoying holidays, right? What I mentioned just now should think about how do we keep our books separate, not only for tax, but if I have 2 or 3 businesses, I should be able to generate my financial statements and my income statement for each business. As a business owner, I must know business A, B, C, does it have profits or not, right? So that is where I talk about financial discipline. Okay, discipline means generating the right information for you as a business owner to know how to make better informed decisions. Now, before we go into this circular 20, okay, circular, there are also things that I didn't mention in here, things like as a company, even though you're SME, right, if you have related party transactions, then you are subject to transfer pricing regulation. Okay, so that is kind of critical or important because I've gone through I've had 2 or 3 tax audit last year, right? For SME as well as for MNC that has got related party transaction overseas. Okay, the first thing they ask is, show me your transfer pricing documentation. Show me your related party agreement. Show me how you calculate these related party charges. Show me, so if you cannot show any of this, then your expenses don't get tax deduction. Okay, so it goes back to the point, proper financial discipline, right? Documentation, everything should be done as an adult. Managing your company's finance, right? To ensure that you are in a better position to defend any challenges from the tax office. At the same time, if your financial statements are very clear, you can present to the bank, right? If you want to get loan, it's easier. Okay. So Decree 200, okay? Decree 200 is separate from the tax regulation, okay? It is issued to provide guidance on implementation of Resolution 198 and is targeted for private sector development. I read this as the authorities want to encourage private business to develop, not just private, right? They want to encourage more Vietnamese to be entrepreneur, as well as startups and R&D activity. So we are looking at encouraging more innovation within the country, right? And if there are probably somebody in the government will be thinking, why can't we be the Silicon Valley of Asia? Okay, so they are issuing out this incentive for newly established company, right? You get 3-year exemption, but it is subject to anti-avoidance rules, meaning to say, if it's a new company that is related to another company, right? Then is this new or not? Right? So that's the anti-avoidance rule. It's to prevent me, I run a business with this incentive come in, I set up another company, transfer the business across, right? Then I try to enjoy the tax holiday. No. They would know if I'm own this business and this business, right? Then I would not enjoy the incentive. Okay. The other part is CIT incentives. So for innovative startup and R&D activities, okay, 2 years exemption and 4 years at 50%. Income must be separately accountable. So again, we go back to the governance. We go back to how you manage your books and your financial statements. Capital transfer, basically this is same as what we mentioned about 2% just now, right? If you start a innovative startup and eventually you sell it for $1 billion, then there's no tax. And also at the same time, if you hire professionals, you hire professor or people in your startup, then they also get personal income tax exemption. Okay. Questions. We are at 5:48, 12 more minutes to 6. I have 3 more slides. I know normally when I attend a seminar, I won't remember everything. Okay, there'll be 1 or 2 things I remember. What I remember is always things that matters to me. I will have more questions. And what I also remember is things that the speaker say is wrong. I still remember that. So hopefully after today, you only remember what matters to you. Yeah, this is the part where we talk about the support for digital transformation, right? So enhanced deduction for R&D and innovative activities. Enhanced means double deduction. Any expenses you incur for qualifying R&D technology innovation, right? You can claim 2 times the expense. You incur 1 billion, you can claim 2 billion. The only thing is supported by evidence and substance. Okay, this is again the part where evidence and substance. What does it mean? I'm a business owner. I have my evidence and I explain the substance, right? But then, of course, the government will say, this is not enough for me. So that is always the challenge in dealing with any tax authority, not just Vietnam. Okay, in any country it's the same. So that's why documentation is important. Science and Technology Fund increased to 20%. This is something that not many people apply, right? And this is the part where I talk about PIT incentive. So if you know experts, right, which you think you want to bring in for your startup, for your next unicorn business, right? Bring them in and tell them you don't need to pay tax in Vietnam. Okay, I will check with Acclime and Kevin to make sure you don't have to pay tax in Vietnam. I will check, but yeah. So key takeaways, right? Optimize corporate structure for professional tax rate. If you enjoy tax incentive, right? So most risk comes from deductibility and explainability. Okay, what it means here, right? Although you're paying 20% tax, although you're enjoying tax holiday, right? But then most of the time it's because of tax deductibility, you cannot deduct, and because you cannot explain certain expenses, you pay higher tax. Okay. Accounting judgment now matters more than mechanical compliance. Okay, so at the end of the day, in the past, for example, if I make provision for debtors, I just say 50% of any debt that is more than 6 months is deductible. But now it's no longer that, right? Now it's more of how can you prove and the decision behind the provision that you make. Okay, clear data, clear decision, right? The tax authority often asks whether or not the expense is in line with your company's policy. So with the Circular 99, right, with the requirement for companies to maintain proper accounting policies, right, in the future, I foresee the tax office will say, is this expense in accordance with your policy? Show me your policy, right? And if you can show the policy and it complies with the your policy, then you are in a better position to defend it. You don't have a policy, right? Or the policy is not consistent, then tax office will use that result to say, oh, non-deductible. Okay, and also be aware of your effective tax rate. Okay, for most of the big companies that I work with, that has proper governance, the tax manager always every year study what's the effective tax rate, find out the reason why, right? And reason for the higher effective tax rate, certain reasons are acceptable, non-acceptable ones, action has to be taken to reduce the effective rate in the following year. Okay. Yeah, so what here is what SME should focus on. Look at your policies, right? Identify audit risks, strengthen control, and yeah, if you have incentive claim, then ensure that you have the records to support the claim for the incentive. Okay, there's one thing I always tell clients: whatever you do in your business, don't always think about how to pay less tax, how to pay less tax, how to pay less tax. Important thing is how to make more money first. Then next is how to manage it so that you don't pay more tax than you should, right? And when you are paying at 20% already, right? Then you think about how to pay less tax. I've seen clients who make decisions just basically based on tax, right? They'll ask, this way, do I pay less tax or not? Then they'll try to go towards that decision. But that is not right. The right thing is you must do what's best for your business first, right? Not immediate, but long term. Now, very quickly, last two slides, right? Common pitfalls of SME and how to mitigate them, right? Treat accounting as compliance and not management information, okay? Now, a lot of business I know in Vietnam and other countries, they'll only look at their financial statement once a year. Right? That should not be it, right? It should be, you should have continuously financial statement every month to know your business, okay? So it should be used as the management information, okay? Next is a lot of business underestimate ETR, right? And many of them have weak documentation for the claim for deduction for incentive and for normal deductions. Weak documentation, that's quite common. Yeah. Chasing optimization instead of building resilient, right? They focus on short-term savings, right? And not look at what is long-term, how to build a more resilient business and yeah, for the long term. Because like now during political policy change, during the tariff, during the war now, right? There's a lot of external factors that impact your business. So for SME, important thing is what is important for your business, right? Like for our business, the important thing is our clients and our people. So those are the things that should be focused on and not look at short-term issues or short-term optimization. Next would be related party practice. This is the biggest headache faced by many companies that has got management fee, royalties, and so on, right? And then finally, FX, cash, FX, and working capital discipline. Okay, I have seen many business, right? They run their business every month. They have to report, but at the end of the year, they still make a loss because of foreign exchange loss. So one of my clients, every month they review their financials, right? Very happy. This year we will break even or make some profit. But then when the audit is done, make a loss because they forget to account for foreign exchange losses. And they didn't plan for that. So those are all these factors, right, will impact your business. And things like this you have to be aware of. Of course, if you sell from Vietnam to overseas, then at the end of the year, you'll be very happy because you have a huge gain in VND terms, right? But people who buy from overseas, if they don't manage the FX, right, then it's a big challenge. Okay, that's it. And this is our publicity, right? Where we are all in the countries in yellow, not yellow, orange, okay? So our tagline is, our business is advancing yours, okay? In Vietnam, we have 3 offices and 170 staff. Yeah, and this is our menu of our services, okay? And that's it. I got 1 more minute, any question? 1 more minute to 6 o'clock. Yeah.
Back to the key takeaway, you say that the company had maybe had a rules who had the responsibility who so the company had to internal regulation framework and documented request by the law, or we should do that, or must do that according to the law?
The law encourage you to do that.
What?
Encourage.
Encourage.
Because the law never say if you don't do, they will send you to prison, right? Right or not? So it's encouraged. Why they encourage is you have to have proper governance, right? Because if you don't do it, the Ministry of Finance will not come and check whether you do or not, right? The consequences is where, when the tax office comes, right? Then they are the one who say, oh, you didn't follow the law, so I will fine you, or I will not let you get the deduction.
That's the reason I asked, because it's a micro, SME, but micro own companies are never for us to.
Yeah. So you can always do a micro policy, right?
Yeah.
So at the end of the day, again, it's no longer rules based. You would be setting things up based on your business needs, right? If you are micro, fine. Then we do a very simplified policy, right? Because it is healthy to start from micro, right? And as you grow to SME and you grow bigger, the foundation is already there. Okay, many friends I know, when they start, they say, no need. As they grow bigger and bigger, then they say, very headache, everything very messy, right? So it's always good to start when you're young.
Yeah. Another question, like Australia company and a joint venture in Vietnam and a joint venture in Cambodia, and the parent company in Australia had a problem. Difficulty to sold to another one, and because they get lost, even the joint venture get lost, so they sold with $1 to another company in Australia also. Is that?
I sold Cambodia and Vietnam for $1.
So whole division. The company in Australia and whole division, the two joint venture in Cambodia and Vietnam, they sold $1. So should they pay the tax for Vietnam and Cambodia? I don't know. Maybe in Australia they had to pay tax to follow the law in Australia, because they intermediate in the Australian company. But in Vietnam and Cambodia, so they need to pay tax in Vietnam or not?
Yes.
Request.
Let's say Vietnam, right? If I sell the Vietnam company, there is a transfer of ownership, right? So because the transfer of ownership happens here, right? You have to pay tax here. So you pay tax based on $1. 2% on $1, so you pay 2 cents. That would be how it has to work. The practical challenge is tax authority will say, cannot accept $1. That is very practical, right? And the mindset of the authority is, I cannot accept $1, and this is shared with all the consultant and advisor, and consultant would tell the client, cannot do $1, right? Because the tax office will reject. So then they end up, the client would create an artificial figure. Even though the sale is $1, they'll create an artificial figure just to pay the tax. My position is always, if you sell at $1, then report at $1. Why need to create something artificial, right?
Over the capital. After all.
Yeah, I understand. We have one client we did before. It's a listed company sold to another listed company for $1. And we declare to the tax office $1. They ask why, we explain why. And then they accept. The problem in Vietnam is not the problem. I guess the challenge in Vietnam is we have to work with 36 provinces. Each of them have different thinking, right? So we work with Hanoi, they say, okay, Wait, Ho Chi Minh, sometimes they say no. But as a tax practitioner, I always feel a little bit sad when taxpayer go all the way, not follow the law, right? But go and do things that is not following the law just to please the tax officer. Yeah. So clients come to me, I always ask them, you want to fight or not? You want to fight with them, then we help you fight, right? Yeah, I have my staff there, she's very good at fighting the tax office.
And the last question is before the 1999. So I remember I had two policy. It's one three for small company and 200 for the bigger company. So now no more. So now it's only 199 circular 99.
Yeah, only one.
Every company, big or small.
Yes. We cannot have, I think, cannot have different regulation. When do I follow this and when do I move to this? Right? So which in any country as it develops further, it should be only one. Any question? You can ask in Vietnamese. It's still okay. Chinese, Malay, any language.
But their parent company, this is the FBI company has the revenue more than 50 billion. So I wonder that the company in Vietnam, whether does it have the benefit CIT rate or incentive rate 17% or still have the standard rate 20%?
This back to the rule, right? That anti-avoidance rules. Okay, this anti-avoidance rules, it also apply to this part here. Okay, it does not, is put there so that company don't say I have a business revenue of 10 billion. I put it in 3 companies, right? Then because it's all related, then I shouldn't enjoy the incentive. To your question, right? Talk about 50 billion, right?
Yeah, 50.
To your question is the definition of related still not very clear.
Related.
Yes, that means if I earn 50 billion or less, but I am related to another company that earn 50 billion or more, then I will not qualify. Or does it also apply if your case in Vietnam and in overseas? So that part is still not clear. That's why the tax office advises until then pay more if you don't qualify. You won't get a fine. You just pay some interest.
But if I pay 20 standard rate 20% first and then can we refund be qualified?
Of course, but it's difficult. It's difficult to get money back from the government. Yeah, so you just offset against next year. So I think this is where decision has to go back to your management, right? To decide to go at 17% or 20%. But then before your management makes any decision, they need to know more information. So the management should always make decision that with all the facts and knowing what are the risks, then what they should do. Okay. So right now it's still ambiguous as to whether or not this does it also apply for only for a single company or companies that are in Vietnam with affiliate overseas. So this will be based on your revenue last year. Yeah. So last year, if you make less than 50 billion, right? Then you can, yeah. So yeah, I guess most of you know in Vietnam, sometimes we still need to get more guidance from the government. I thank you for the time, right? And remember what I say, only remember things that are relevant to you. The rest, if you have a question, yeah, feel free to come back to us. More than happy more than happy to answer challenging questions. It's through challenging questions that we learn and together with our clients.